Holy smokers, this ain't no jokers. Tom Lee out with a big warning to stock market investors. You got to be flipping my flapjacks, folks. We got a 6-piece to get into in this one here today. Right off the top, I'm going to react to this Tom Lee video here. Investors should be cautious for the next 8 weeks. I think that's going to be really interesting because you don't hear Tom Lee very cautious very often, right? Then from there, we're going to get into this one, Hightower, Stephanie Link. Investors should add to September weakness if we get it. I think that's going to be an important one to react to. Expect the tech trade to continue to move higher in September. Munster went on CNBC this morning. Man, they had all the big heavy hitters out on this morning, right? Tech opportunities beyond NVIDIA. This one's from Bloomberg a few hours ago. I want to react to that one, talk about some opportunities outside of NVIDIA. Then I want to react to this one. She looks like an assassin. I'm just going to be honest with you guys. There's still a lot of nervousness in this market, says Amy Wu. So I want to react to that one, kind of get to share my opinions and perspectives there. And where dollars will flow when the Fed cuts rates. I think this is actually an important subject to cover because we know rate cuts are coming, right? It's just a question of is it this month or next month, right? And so we know rate cuts are about to come here. And where's that money going to flow? I think it's an important one. So appreciate y'all joining me as always. Thank you so much for being here. Thank you everybody that smashes that thumbs up button. And thank you everybody subscribed to the channel. We're on the path to 50,000 subscribers and we're getting pretty darn close. It's a rough one out there for a lot of stocks. Look at NVIDIA under 110 here today, down over 8%. Intel's getting slashed big, over 7% drop there. MU, the memory chip giant, over 7% down there, down to 89 bucks. AMD's at 138, down 6.5%. Shopify's getting hit hard. Google's getting hit hard. A lot of stocks getting hit hard. Tesla had been green, and PayPal had been green, but even those ones turned slightly red here. So just a brutal kind of start to the month. I looked at the public count though, and I was down like 1.2% a little before I started this video. So I'm like, I'll take that. On a day like this, where I see this sort of damage out there in big tech and the Russell stocks, I was very happy with kind of where I was at. Alrighty, let's get into this. Tom Lee,
partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting sort of in the middle of the month, but this week is the jobs report. I'm sure there's going to be a lot of focus on that.
Right. So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great, and we know, I mean, we always make lows in October, or we have many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. The market's been up 7 of the 8 months this year, so we know it's an incredibly strong market. But we also have the September cuts, and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have...
So here's why I'm a little suspicious, okay? So everybody knows September can many times be a rough month, many times the worst month for the market overall, right? Everybody knows that. Like, if you've been in the market any amount of time, you know September is usually bad. Additionally, you know the market usually keeps going lower in October and then bottoms at some point in October, maybe mid-October, maybe late October, right? So everybody knows that. So and everybody's talking about that as well, including Tom Lee, obviously, in this video. So I start to get suspicious when everybody's kind of on the same wavelength here, right? And so I even look at a day like today and I'm like, what a perfect, it's the first day of September, drop the market a bunch, right? Bunch of stocks tank, freak everybody out, get everybody convinced like, oh, yep, it's going to be a bad September, right? And then all of a sudden it ends up not being a bad September. The market goes risk on, and next thing you know, we're at new highs at the end of September, new highs into October, right? And then everybody's like, whoa, we're flying here, baby. And then all of a sudden they're like, well, November and December are almost always great for the market, so we're going to keep flying. And then all of a sudden after that, that's when the market tanks, right when everybody's like, no, this is when the market's supposed to be good. Like, how are we tanking now, right? I don't know if that will play out. And I'm not making any prediction that that's going to be the way it plays out. I'm just always trying to think contrarian versus what I'm hearing out there. Everybody's talking about the points everybody knows, right? And I'm kind of thinking about, do we go oppo here? Do we go opposite of kind of what everybody's thinking about? And I don't know. We'll see what happens. But don't be surprised if it ends up being a fake out. Next thing you know, you're rolling higher. Everybody's thinking risk on, and then once everybody's on the risk on trade, then that's when all of a sudden the market drops for real.
Fearless, and you'll say anything. You have in the past actually talked about election-related trades and Trump trades. And did you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah,
no,
Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being
Bitcoin's on basically just one massive kind of just slow grind lower for months and months now.
Even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election, but
because there'd be more production, bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity. And the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably the market.
That's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so
oil freaks me out for next year, big time. Oil freaks me out after they start cutting rates. That's what scares me. If there's one thing that actually legitimately scares me about, like, we don't have the soft landing, we don't have a medium landing, we actually have a hard landing, it would be a scenario where the Fed starts cutting rates, commodities go through a boom cycle, right? And then next thing you know, the consumer is hit with that last leg of inflation that they just can't handle. And then after that, you get the big recession, right? Because I feel like up until this time, the consumer's like barely clinging on. But I feel like if we had one more wave of inflation, which could come in the form of gas prices, because most people still drive internal combustion engines, right? So they have to go to the gas station. If all of a sudden next year you saw oil go 100 plus, I'd be very, very fearful of that. And you saw commodities in general just running natural gas, everything. Because then I'd be thinking, oh boy, that would be not ideal. I don't think the consumer can deal with another inflation situation. I just really don't. And so, I don't know. And that was a situation that obviously happened in 2008. We got that last boom in the oil cycle, right? Oil went to like $140 a barrel. People saw gas prices that they'd never seen. A lot of markets went to $4+. No one had ever seen $4+ for a gallon of gas at that particular time. That was like shocking, right? That's equivalent of nowadays like seeing like $6 a gallon for gas or something like that, right? Across the United States. It'd be pretty dang shocking. So let's hope that doesn't happen, but it is something I'm going to keep an eye on. It is something I'm a little fearful of for next year.
The next, and funny you said 8 weeks, it's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds know this is a strong market.
How far down? 10%?
Good question.
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's been testing investors' patience. But I think we should expect turbulence.
And then the question, of course, is when the turbulence comes, is it a buy the dip always?
So the best case scenario, in my opinion, that I would love to see is I would love to see us, have it basically September be really, really dang weak, right? and then into October, first part of October week. And I would love to see all these like value stocks, dividend stocks bottom out around that particular time. And that's something I've kind of been thinking would happen as a lot of these stocks bottom. I've been calling that, a lot of these stocks bottom in the fourth quarter of this year. And I think that's something we could definitely see playing out with a lot of these stocks. There's a big question of tax loss harvesting, right, and kind of what happens there. So that's my possible buys to watch list. I'll put it back here on big tech. But yeah, we'll see. We'll see in regards to that. But that would be my best case scenario.
I think or is there going to be and by the way, buy the dip at when it goes down by 2 or 3%, or you really actually have to wait for a 5, 6, 7% pullback?
I think 1 or 2 is just almost like daily noise. This market has shown, pullbacks like that. So I think something like a 5% pullback is very likely, but I think we need.
And are you waiting for that?
Yeah, I think it. You know what? We'll find out this jobs report because. Like if it's too strong and investors worry and so the stock market's down Friday, I would be buying that dip. But there's a chance that we get a good jobs report and the market's up. I hate to sound so binary, but I would just say at the bottom line is it's a strong market. So I don't think we've seen the top for 2024. It's just that the next 8 weeks are tougher.
Okay, so that's a big comment there. We have not seen a top for 2024. So basically he's just calling for a weak September, October, and then rally November, December, which would be very customary. That's what you see many, many years. Next one up here, Stephanie Link. Investors should add to September weakness if we get it.
Chief Investment Officer, she's a CNBC contributor. School is back in session, and so are the markets. Stephanie, what are you doing?
Good morning. I'm buying. I was adding last week to a few names in Broadcom, in CrowdStrike, in Chipotle, and I think you want to be adding to stocks on weakness if we get it. And today we're getting it a little bit. September should be likely a little bit volatile, and I think you want to use that weakness to be adding. I mean, we got through 2 big hurdles over the last couple of weeks, Andrew. We got through Jackson Hole. We had a very dovish Fed Chair Powell, and then we got through NVIDIA, which was actually quite good. I know it sold off on the news, but the numbers were really good. The AI boom continues, and so in the meantime, you have the economy growing. We had a GDP second quarter that was revised higher to 3%. The Atlanta Fed tracker for the third quarter is at 2.5%. You had pretty good PCE on Friday, and so I think all that translates into pretty good earnings, and so that's why I want to be adding to weakness if we get it.
You said you think this is going to be a bit of a choppy period. We always wonder how choppy it's going to be.
Yeah.
When you think about both the number we're going to get on Friday and also overlay the election, that's what we were talking about earlier.
Should you be adding on weakness? And the answer to that is very easy. You should be adding every single week pretty much to positions, or every other week, right? Depending upon your income, expenses. I add stocks every single week. I'm buying out there every single Friday pretty much. And yeah, unless the market's closed on Friday, then I'll buy on a Thursday or something like that. But every single week I'm adding. There's great deals this week. There's great deals last week. There's great deals next week, and the next week, and the next week, and the next week. So you ought to always be looking at opportunities out there. There's thousands of stocks in the stock market. There's plenty of opportunities.
I said there was going to be there's a sprint from Labor Day to Christmas. Joe said there's a sprint for 68 days with the sprint to the election in the middle. It's the intermission.
63 days.
It's the intermission of the of the big show. So how does that matter or not in your mind right now to how equities are moving?
Well, yeah, I mean, I think you are going to see some choppiness over the next couple of months. But again, if I look at kind of what the economy is doing, the economy has been resilient. I mean, this is an economy that just won't quit. And if you look at a lot of the data that I just mentioned, and in addition to kind of GDP and the revisions there, you've had ISM services that have actually been good. The new orders within ISM services have been very strong. And the employment numbers, by the way, within the ISM services has been actually better than expected. I think Friday is going to be fine. I think we get, maybe we get a little bit of chop on the news, but I think overall we are growing. If we're growing 2.5% in the economy, earnings can actually be 8 to 10%. and you can see it broadening out. We are starting to see a broadening out in the markets, which is very encouraging, Andrew. I mean, this morning you've had a whole slew of upgrades in some of the banks. I mean, the bank sector, I mean, they're trading like 1 times book. And they have great dividends and they have good capital. And so that's a sector that I really like. Industrials I really like because you have this whole renaissance going on with onshoring, reshoring.
Right.
The consumer is choppy, mixed, but I think you have some winners and losers. Winners are Target, Walmart, and Costco. Everybody else, I think they have some, there are some issues there, but I think you can pick and choose.
Give me the tech AI story in your mind right now, because I think that there's still it feels like such a jump ball at this point.
I know. No, I mean, I don't think it's a jump ball. I think the stocks have actually had such a nice run. So it's hard to, the risk reward is not great. But I do think that you're still in very early innings. You've got a total addressable market of like $1 trillion. I thought it was very interesting last week. Marvell reported a good number, and it was their AI business was good, but it was their non-AI, the cyclical businesses that are starting to see a recovery. That's why I like Broadcom. I don't want to play it for the quarters per se, but I do think if you have AI and the AI orders are running up something like 200% for Broadcom, and then you have now the cyclical part, the non-AI business, which Marvell just told us was actually recovering. That business for Broadcom, their orders grew 30% last quarter. So I think that there are ways to play it. I think you definitely want to have exposure, and you want to use the volatility to be adding to those names.
We're going to hear from Apple.
Yeah, the tough thing for all these AI stocks right now, obviously the big dog is NVIDIA, right? And we see that one continue to kind of go down and down and down. If we pull up the chart here on NVIDIA, so it's been obviously pretty rough since prior to that earnings, and kind of where we're at here. Prior to the earnings, it's down about 15% pretty quick here. The tough thing in the short term for these AI kind of related stocks is everybody's looking and they're kind of like, the numbers are great. We know the numbers are great. The problem is there's massive deceleration going on. So people are looking at that and they're kind of like disappointed with that, even though, if you know how to run numbers, like, this was going to happen, right? And there's just not the excitement there right now, right? Like, we know those companies are executing. We know where they're doing numbers. We know NVIDIA is going to continue to grow for at least the next year in terms of their revenue and their profitability. Everybody knows that now. So there's not like there's a surprise to the upside. It's not like, oh, there's some new thing NVIDIA came out with that's like a big game changer. We all know about the Blackwell chip. Like, there's nothing there, right? And there's nothing in the numbers that make everybody say, there was nothing in NVIDIA's earnings report that made them say, oh my gosh, we never saw this coming. This is amazing. Like, whoa, here we go, baby. And so that's why that stock's having trouble moving up. After you've had an extended move and you start to reach richer valuations in regards to your forward PE, your 2-year out forward PE, we can look at those. I can pull those up right now in 1000x. So if we look here at NVIDIA, around a 44 forward PE, 30 on a 2-year forward PE, obviously as your valuation gets higher, and these metrics, by the way, were a lot higher just a few weeks ago. I mean, because clearly the stock's in a very different valuation area now than was, like literally it's probably lost what? $400 billion of market cap or so, maybe more than $400 billion of market cap just in the past week or two. So that's the issue you kind of have for these stocks in the short term, is there's no like real, oh, we never saw this coming, excitement to the upside now at this point in time, right? Which kind of weighs on a stock price in the short term. It doesn't mean NVIDIA's doomed long term, but in the short term, that makes it up for a very tough dynamic, because people need to get excited about something to really go out there and buy. And when you had so much excitement in a stock for really over a year and a half straight, and then that excitement gets taken away, gets sucked out, that leads for a tough situation for the stock price in the short term.
About a week from yesterday, in terms of Monday next week,
yeah,
with their new product offering, the new phones and everything else. Do you buy into?
Which, by the way, if you're a long-term investor in NVIDIA, you should love that the stock's lower right now for 2 reasons. 1, you can buy for cheaper. 2, guess what? The company can buy shares for much cheaper. So if you're an actual long that wants to be in the stock for the next 3, 5, 7, 10 years, you should be rooting for the stock to go lower. You should want the stock to go to $80. Would you not like to buy some shares for cheaper? The traders might be a little frustrated by this move, I'll be honest with you guys, because they want 140, 150 after these earnings, and instead they got 108 here, so they're going to be frustrated. But the investors, like the ones that really want to be in the stock for years to go in the future, root for the stock to go lower. for it to go to 75 bucks. Would you not like to buy Nvidia at 75 bucks? I'm sure you would. Would you not like the company to do a massive share buyback at 75 bucks? I'm sure you would, right?
Whatever you think the Apple move is going to be ahead of that, do you wait to hear what you're going to see? Do we pretty much know what we're going to see?
Well, the stock is up 30% from May. And so actually, I've been trimming Apple. I like it really a lot for the long term. But I do think that the expectations are a lot higher. I do think you are going to see a whole refresh cycle. But I don't know if it happens right away, Andrew. And while it might be exciting what we hear about and for the long term in terms of AI and in the phones and the refresh, but I'm not sure we're going to get a lot of answers next week, and the stock has run quite a bit. So that's why I was kind of taking some profits. Everybody hated this thing, right, in the spring, and that's when I was adding to it. And so now people, are really jazzed up about it, and I think it's time just to take some chips off the table.
A little bit like Buffett, though. Buffett took him off earlier. Buffett actually took him off back in May, in fact. So he missed a little bit of that upside. We'll see where things land. We'll call you Mrs. Buffett this morning.
Okay. So listen, here's the deal with Apple. Obviously, they're about to show off their new phones here very soon. If I recall, what is that? Is that this week? No, that should be next week, if I recall, right? They're going to show off their new phones and all that. Here's the deal. What happens to Apple stock usually when they show off their new devices? It goes down. It goes down very, very often. And so just kind of keep that in mind. Like anybody that plays Apple for a trade thinking, they're going to show off the new products, the stock's going to go up. Like that just very rarely happens. It's like I've seen it so many times where they'll show off all their new devices and then the stock goes down and down and down. Expect the tech trade to continue moving higher in September. Gene Munster.
I want to do that with Gene Munster, Deepwater Asset Management managing partner. Good morning to you. Gene, we've been on quite a wild ride when it comes to the Nasdaq and some of these tech stocks. I think there's a question about, given where some of the big tech and AI stocks are right now, whether you're a buyer, whether you're a seller, whether you're a holder.
Andrew, I am a buyer here. I continue to believe we're in the first stage. This may be hard to wrap many heads around. First stage of a 3 to 5 year bull market. There is a headline in the Wall Street Journal today talking about the market is really, really optimistic right now. And I believe we're still just beginning. That typically is a negative sign when you start to see headlines like that. But I do believe, Andrew, that we're going to continue this. And I think September is going to be just an important step towards that 3 to 5 year bull market. We got, of course, what's going to happen with Apple next Monday. This is the biggest event for Apple over the past decade, I would say. Second, I think there's going to be a changing view of over the next month over how investors view NVIDIA. And last, of course, we have Tesla, the October 10th event. We're going to get some anticipation around that. I think when you put those three kind of cornerstone elements together, I think you're going to continue to see the tech trade move higher in the month of September.
Okay, Gene, let's talk about those three names, though. Let's start with Apple. And there is a view, I think, based on the 30% move on this stock since May, that there's going to be a
NVIDIA just hit down 9% now. Geez.
Cycle style buying pattern around the new phone. Do you believe that this year is that? Do you think that gets pushed out to next year? I ask because it's not clear that all of the sort of AI functionality is going to be embedded in the phone and available this fall.
So it's going to be some bumps, some good, some bad over the first couple quarters, but ultimately I believe that this can go much higher. I think if you look at what happened with the iPhone 6 a decade ago, it was up 12%, with the iPhone 5. The iPhone 6, it was up 52%. It just absolutely ripped, Andrew. So I think that this can certainly move higher. I think that ultimately, we're going to see this big upgrade cycle coming. And a question I'd have for you, Andrew, is do you believe that these features are going to be exciting enough to move it higher?
So my opinion is the features are not exciting enough to move it higher. I think the far majority of Apple customers don't care anything about this AI crap. Okay, they just don't. What they are going to care about is the fact that this is going to be the biggest iPhone ever. Okay, much simpler than that. Now, we know every single time Apple launches the biggest iPhone ever, they always do well, right? And so they should do well in this cycle. But there is one thing we all have to factor in, we have to take into account, is the consumer in a strong enough place right now? to upgrade like insane. Because I look at Apple right now and I say this should be a booming cycle. The biggest iPhone ever should be a booming cycle for Apple. But then I also think I'm like, is a consumer in a good enough place to dish out $1,000+ for these iPhones? And so that's where I'm a little like, maybe it's not going to be as big of a boom as it could be, right? Given that the consumer's maybe not in the best place that they were maybe in previous iPhone launches when it was the new biggest iPhone ever. So I don't know. That's just something I'm considering. Don't factor. We're not going to know the true demand for the new iPhone generation in the first like few months it's launched, right? It should have big wait times. There should be a lot of excitement, and that's the wealthier Apple customers that always have to have the newest and greatest. They're all going to buy this, right? A lot of excitement. You know the true demand of these iPhones after Christmas, after the New Year's, and then we get to see, okay, what's the true demand, right? The early people are going to be early. The people with a lot of money, I'll probably order one, right? Those people are going to be out there. They're going to buy it. As soon as it comes out, they're going to be on the website. Boom, 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 right? So you're going to see crazy demand. But don't let that fool you, because we've got to see what the real demand is after New Year's. That's when you find out the true demand of an iPhone.
No, I'm somebody who oftentimes gets the new phone almost every year. I love the products,
there you go.
As you know.
Exactly.
And so, I'm a geek
like
when it comes to this tech. What I don't know is I use ChatGPT and other products like Claude from Anthropic and Google's product as well, and I can do that right now using either their apps or going to their websites. The question is, how integrated ultimately does it have to be into the OS itself? And how, even if it is, it doesn't even sound like it's going to be fundamentally integrated in certain cases, right?
The integration, of course, is going to get rolled over the next year, but I just want to put some context. I mentioned that iPhone 5 to iPhone 6, that massive acceleration in growth rate. And the reason why that's so important, the reason why the iPhone 6 had that breathtaking growth is because it had a feature, the first larger screen that that consumers really got excited about. Yep. In the case of these AI features, you are correct. It's going to take a year or so to roll out. But if they're as good as I believe, I think these are going to be features that when consumers see them, they will view them as must-have. I just want to put some quick...
No, I just disagree with that, okay? Bigger iPhone, yes. These features are going to convince the masses to say, I got to go get the new iPhone. No. That's silly, Gene. Like, come on, man. What planet are you on? But we also got to remember, like, don't think this is going to be as exciting of a cycle when we went from 5S to 6. Because when we went from iPhone 5S to 6, it's very important people remember. At that particular time, Samsung was tearing it up. They were taking market share. Samsung had the big screen smartphones, right, at that particular time. And so if you were around that in that era, you know what I'm talking about. If you weren't around in that era, you probably have no clue what I'm talking about right now. It was a huge deal. But a lot of people were gravitating towards Samsung because their screens were so big. You pulled out your iPhone 5S. I had a 5S back then. It was like this little screen compared to these Samsungs had these giant screens, which now we've become customary to. But at that time, oh my gosh, they were huge. And so when Apple finally came out with the big screen iPhones, iPhone 6, it was monumental for the company. And their units went crazy. Now, with this new iPhone, it's going to be the biggest ever, but it's not going to be as big of a change. So if you're expecting the unit amount to go up the way it went up back then, don't get too excited about that. Additionally, at that particular time, we hadn't had consumers get hit with inflation the way they had got hit. We had an unemployment rate that continued to drop and drop and drop at that particular time versus recently. Obviously, it's been going up and up and up. So the economy was at a little different place. The consumer was at a different place. iPhones were a lot cheaper back then, also something to factor in, right? An expensive iPhone back then was like $600, $700. An expensive iPhone nowadays is like $1,400, okay? So that's another thing to kind of factor in here. So, yeah, it should be an exciting upgrade cycle for Apple, but don't expect it. When he brings up the iPhone 6, no. That was a different time.
Into the sensitivity around the numbers is that the iPhone upgrade cycle, it's typically a 5-year upgrade cycle. If the cohort that is supposed to upgrade in calendar 26, so call it a year out, if 10% of those decide to upgrade in calendar 25, that takes iPhone growth to 15%. The street's currently looking at 7%. I asked the question about, how big are these features? How do you feel about them? I think consumers overwhelmingly are going to embrace these features. It may take a few quarters, but I think you're going to see meaningful upside to Apple over that period.
Gene, I am super excited about it. I just don't know if I'm representative of the common man. I'd like to think I am. But Gene, here's a separate question. NVIDIA, at this point of the ball game, what inning are we in for them?
I think we're in the third inning, and that ultimately I think that there was a misunderstanding of what happened with guidance. They guided up by 2.5% for the October quarter. Previously, when they guided for the July quarter, they guided up 5%. So there's this narrative about this deceleration. But keep in mind that Blackwell slipped. They didn't use that language, but clearly, if you go back and look at the transcripts from 2 quarters ago to the July quarter, it slipped by 3 months. That's $3 billion, they said, several billion. You factor that in, NVIDIA would have raised guidance by 12%, not 2.5%. So I think this is still very early. We own NVIDIA at Deepwater. We think that it is still reasonably priced at 35 times and can grow faster than what the street thinks next year. And in 2026, ultimately, the risk for big companies not to invest in this is just too high. NVIDIA is going to be a big beneficiary of that.
See, that's the issue with some of these more cyclical companies like an NVIDIA, right? Is there's a conversation. What inning are we in? Are we in the third inning, the seventh inning, the fifth inning, the ninth inning? It's such a negative conversation, and this is why these stocks have so much trouble eventually. As soon as people start to get a little concerned about where growth rates are going from here and a deceleration, those sorts of things, you don't have that same conversation with Microsoft, right? No one says, what inning are we in with Microsoft? No. You know why? Because Microsoft's one of those companies that you're expecting to grow every single year for as far out as the eye can see. Do we ever have a conversation around Amazon? What inning are we in regards to Amazon? No. Because its e-commerce business is going to grow and grow and grow and grow and grow. As long as the economy grows, the e-commerce business is going to grow for 100 years in the future. Okay, maybe not that long, right? But 10, 20, 30 years in the future. If we think about AWS, grow, 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 grow. Their advertising business grow. There's not a conversation around an inning, right? But you look at something like an NVIDIA, people say, what inning are we in? And so that's the problem with that. Palantir, you don't have that. No one says, what inning are we in with Palantir? No, you know why? Because Palantir grows quarter in and quarter out forever and ever and ever. And that's the beautiful thing with that. Is NVIDIA going to grow quarter in and quarter? No. NVIDIA has all of a sudden, they'll have some insane growth, right? Their stock price goes insane. Their revenue goes insane. Their net income goes insane. And then, boom, big crash, right? And then a big upcycle, big crash, big upcycle. That's the issue with those companies because people get concerned with timing and ultimately it hurts those companies' valuation over time, right? Which is why you look at NVIDIA and you might say, gosh, man, the Ford P looks cheap if you compare it to some other stocks, right? And that's a fair statement. I mean, let's pull up the compare feature here and compare NVIDIA versus like a Palantir. Look at NVIDIA's at half the Ford P that Palantir's at, right? Now keep in mind, has NVIDIA been growing much faster than Palantir's been growing? Yes, factually. But Palantir, we look at that and we say that company's going to grow year in and year out for the next 10, 20 years, right? NVIDIA, we say they're going to grow for sure this year more. They're going to grow likely for sure next year more. Are they going to grow in 2026? Are they going to grow in 2027? I don't know. That's the issue. Are we concerned that Palantir is going to grow in 2026 and 2027? No. We all know they're going to grow, right? That's the difference. And that's what's important to kind of keep in mind in regards to stock market, the games Wall Street plays, how these stocks are valued, right? That inning conversation, it sucks for a lot of stocks because they get in that and it just is what it is.
Second and third derivative plays, both inside the data center and outside the data center.
Is it too early to be looking for those second and third derivatives, or is now the time? We
don't think so at all. So I think particularly in the industrial space, outside of the data center, as you move from GPU clusters, 300,000 to 1 million, kind of the way that these data center architectures are put together, the way that data center cooling is done, the impact on the grid, we think these are all quite investable themes. I think inside the data center, you've seen in the last 5 years, you've seen GPUs see kind of a 5x improvement in performance. all these GPUs need to be linked together, and the networking around that does that, and that's only seen kind of a 4x improvement. And so those roadblocks are typically quite good places to invest in tech, and there are lots of investment opportunities inside the data center, investing in things like networking, memory is another big roadblock, storage as well. So those are all big themes for us that we can invest in around the AI space.
Is that based on the assumption that huge CapEx spending, around $200 billion from some of the hyperscalers this year, that CapEx spending will continue even as those question marks become more prominent around monetization? That CapEx spending continues into 2025, through 2025, and how?
Well, hold on, my British gentlemen, okay? Listen here. Okay, so it's not just about these companies keeping their current spending up, right? Or, the Metas and the Amazons and all these big dogs that are ultimately driving NVIDIA's revenue. It's about those companies continuing to increase at a rapid scale how much they're willing to spend with NVIDIA, right? And so they're spending ridiculous sums of money. We all know that, right? They're going to likely spend a little bit more in 2025 with NVIDIA. When I say a little bit, a lot of them are probably going to be in the 5 to 15% more money spent with NVIDIA in 2025, kind of from what I'm hearing on these conference calls, kind of, putting the pieces of the puzzle together. It sounds like a lot of these big dogs are going to be spending 5% to 15% more with NVIDIA in 2025 than they were in 2024, which is good for NVIDIA. But the problem is 5 to 15% is not that much when you factor in how much NVIDIA has been growing, which then gets into the growth story there, right? And then what if those companies then stagnate their spend in 26, 27? All of a sudden, then you start to look and you say, oh, is NVIDIA going to grow in 26, grow in 27, or are they going to grow like single digits, right? And then you take away the growth investor base, because the growth investors start looking, they're like, NVIDIA's growing 4%? What? 4%? People got accustomed to triple digit growth, right? And so if you slow that way down, which is very much a realistic possibility, then you start attracting the value investors at that particular time, which then you have a whole shareholder kind of changeover where you have the growth investors, right, move out of the stock. You have the value investors come in and say, this is a good value now at this particular time, which is always interesting to have play out. We saw that play out in Meta years ago, right? It went from, growth investor base and ultimately attracted a value investor base. Nowadays, it has much more of a value investor base, which is why the stock doesn't trade at a very rich valuation. If we pull up Meta here, right? By the way, if you're looking for access to 1000xstocks.com, access to my private stock group, private wealth group, I'll put that as a pinned comment down there today. You can click out that, fill out an application. We'll see if we can get you access later on this week or next week to 1000xstocks.com. But Meta, it doesn't trade rich at all. 24 forward P, and you consider the growth rates this company has are very impressive. But a 24. And the reason being is I don't know, for whatever reason, Meta doesn't attract a lot of the growth investors nowadays. It's more of a value investor base, and it is what it is.
How fundamental is that view underpinning your broader take in terms of those second and third derivative effects?
Yeah, I mean, it's absolutely fundamental. I mean, though hyperscalers are kind of 50% of NVIDIA earnings, I think what we have seen in 2Q earnings is this divergence between investors increasingly questioning the ROI. I don't think that's the right question to ask. And management teams saying this is existential. We must invest in this regardless of returns. And you've had them, Satya and others, in various ways saying the risk of underinvestment here is far greater than the risk of overinvestment. Now, to your question, that does introduce the risk. Next year, I think visibility is very good. The year after that, the history of semiconductors suggests that you do get these digestion periods. And in the future, that is reasonably likely as you get those periods. But certainly what the market is saying, or what these CEOs are saying, is we are going to continue to invest. And if you look at CapEx forecast into next year, there's a strong move up again in CapEx. And the problem here is not demand. The problem so far has been supply, which again that was one of the good things about NVIDIA results, which is that both on the supply side, both on Blackwell, which has been a big concern for the market, it was quite strong in the commentary, and also on the CoWoS supply, so on that kind of TSMC supply that's been a big problem. That also seemed quite positive.
Okay, that's really interesting. So you have that visibility into and through 2025. 2026 becomes a little bit more hazy, maybe. Exactly. You touched on the grid upgrade, because of course the energy component in this is really crucial given the demand for these data centers. How are you thinking more specifically about investing around the grid upgrade that is going to have to happen to support this technology?
Yeah, so first,
what could add insult to injury in regards to the NVIDIA situation for 2026 specifically is, imagine we start to get a big unemployment cycle in 2025, right? The recession comes, all those sorts of things. And then these companies were already going to massively slow down their spend as it was, but then you add on recession on top that could add obviously more pressure, and so that could obviously impact growth rates substantially. And then you could be talking about, do revenues go negative for a year or two, right?
It's a global phenomenon, so you can invest globally. It's not just the United States around this. So the industrial space in particular is quite interesting. I mean, if you look at things like new data center architectures, you're having problems around kind of GPUs melting. And that's hugely problematic on what are very, very expensive data centers. And so particularly in Taiwan, I was in Taiwan a few months ago, in the industrial space, you're getting new data center cooling solutions. So you're moving from something called air cooling to liquid cooling. That's really interesting. And then on the grid itself, there's estimates out there that are pretty punchy, but the US is expected to add something like the electricity consumption of Spain to its grid. Now, in the US, with an extremely old, underinvested utilities...
Hey, you British gentlemen, be nice to our infrastructure. We got the best electricity. Come on, man.
Infrastructure, that's problematic. And so you've got this double whammy of reshoring, where that's prompting a rebuild of the capital base in the US, alongside AI coming along and putting even more pressure on the utilities space. So there's kind of this double whammy on that part. Industrials have a role to play on the cooling side, but also how these data centers are all linked up. You're seeing far more geographical concentration in data centers as well. The grid isn't really set up for that, so you're seeing kind of more concentration in parts of the US, parts of Europe as well. So there's a lot of kind of re-architecting that needs to be done, which is going to take 5-10 years.
Ooh, okay. He's saying, be patient. All right, let's listen to the assassin. Amy. Woo!
To get in the weeds here, so we're all the way back down to 15 maybe on the VIX. So we've made the round trip from the growth scare from 6 weeks ago. You point out, while the VIX has calmed down, there's other things that have not, which, I don't know, that sounds exciting because something might happen, I guess.
Yeah, I'd like to kind of analogize it to folks have been on the plane, altitude has stabilized, right? But no one's forgotten that turbulence. Our seatbelts are still buckled, and those secondary factors that we like to talk a lot about in derivatives, so your hedging demand, your volatility of the VIX itself, they have not come in the way headline VIX has round tripped. And to me, that stickiness is related to the fact there's still a lot of nervousness. And that's a big narrative shift, Joe, from what we saw in the first half of this year.
And we had a chance to talk a little bit earlier. And if there were to be another, so you think that this could portend another rise in the VIX, maybe not to the same extent we saw 6 weeks ago, but it may be ready to do something. And seasonally, it tends to do that, in the next month or two?
Yeah, that's right. So when you kind of look back 20 years, we split it up by month. September and October, these are times when the market tends to draw down, and it's times when the VIX tends to rise about kind of 10% each month. The interesting thing is November, usually you get a decline in VIX, but this year we have the US election, so a big major event that could keep things even more inflated. And even out of seasonal factors, we're finally starting to see that tailwind that we got from the NVIDIAs, from the AI story. That's been flagging for a while. So you're not seeing that upside call demand anymore, which was buoying the market on our side. And then you're also starting to see that demand pick up. So, a lot of times we talk about when the music's gonna stop. You're getting more of those signals now than you ever have been in the first half of this year.
What can be amazing about the technicals is that we can try to guess.
Where's Bitcoin at right now? Because if Bitcoin is holding decent with NVIDIA down 9%, I'd actually say that's pretty impressive. I want to see where the heck Bitcoin's at here. Where are you at, Biddy? Biddy? I think that's a win for Bitcoin. 1.8% down with NVIDIA where it's at. I think that's a win, man. That's a win. That's a winner. And we call that a chicken dinner. Oh, yeah. Ooh, Tesla's starting to get hit a little bit, huh? Adobe's now the best stock of big tech, down 0.03%. Let's get back to the assassin, Amy. Whoa.
The backdrop for the move, the technicals can indicate something's going to happen, but we don't know fundamentally what it is. So I ask you, would it be a growth scare like 6 weeks ago, or would it be a reignited inflation scare?
Look, the answer could be anything, right? But when you kind of look to what has triggered these volatility potholes in the past 2 years, it's been more of the former. And that narrative shift obviously comes down to data points. So for instance, when we look at the NFP price data points, you see that at the money straddle, so that volatility for just that event, as incredibly high. And it's essentially the options market telling you that these data points are more critical than they ever have been, and that could really change the market.
That doesn't tell you growth or inflation. That doesn't tell you either one. People are on both. They're betting on either, then, right?
And that's why it could be both. But when you look to where the markets had the most drawdown and the more volatility spikes, it's been usually growth related. And we can essentially see that in how you think about sectors. So the sector breakdown volatilities tend to give you that flag more than you would on something else.
So we have a jobs number coming. You're saying that if you were a betting person, you would think that the worry is it could be weaker. It could be like the one we had in July, because Tom Lee was just on. He thought that he's more concerned about a hot inflation or too good of a jobs report.
So it's tricky. The way we think about it is not necessarily direction, but magnitude. And meaning what we can do is say, look, this event is pricing as having much more magnitude than it historically has. But unfortunately, we couldn't tell you direction. I wish I could. But the reason the magnitude matters is when it's being underpriced by the market, but the options market actually thinks that magnitude is more important. That's when you get that volatility like 6 weeks ago that was relatively unexpected. It's that magnitude being mispriced relative to what the market thinks it could be.
Right. Well, Tom said, 7 out of 8 months we've been up, so it could be that in this seasonally weak period leading into like October, we always make lows in October. Then what is it? September just started.
Yeah, and that's, I so want, not for any financial reason, I just so want the market to bounce heavy in September and then into October and then tank in November and December. I would love that so much. It would just be so entertaining just because everybody's just on the same wavelength of like lower in September, bottom in October, up in November, December, right? And if we just got completely the opposite of that, oh man, it'd be so entertaining. So entertaining to see where the dollars will flow when Fed cuts rates.
Where they are, funds perpetually have money that they need to invest. Right. And I think that there's a comfort, which is where we kind of fall down the middle on the economic outlook, that we're not looking for a recession. We think that the Fed has this balance. They're going to start. The question of 25 or 50 is not about a recession to us. It's about we've been tight long enough and we can kind of adjust.
I mean 2 years ago, my essay of the year was Lawrence McDonald, the author, writing out just an incredibly clear dissertation of the wall of money that's out there. You're in the turret at Invesco of guessing where that money's going to flow. Adjust that now post Labor Day. Where is the?
Let me push back against that a little bit, because it is a huge wall of money. You know, we constantly, the $6 trillion plus in money market funds, right? It's so much money. It is a lot of money, but everything's relative. Remember with some of these market caps of these companies, I mean, how many companies do we have now that are $1 trillion plus valuations? It's quite a number, right? We have several companies that are multi-trillion dollar market caps, right? And then you go underneath that, I mean, the amount of companies nowadays that are $100 billion market caps, multi-$100 billion, it's actually a long list nowadays. And so when you look at it from that standpoint, it's like, yeah, it's a lot of money over there. But when you look at the sort of valuations many of these companies come in nowadays, you start to say, dang, it's actually not that big of a number. So just to push back against that point a little bit, I thought that would be an interesting kind of way of looking at it.
Of cash can flow.
So I think every year in September, you have massive amount of corporate supply. So certainly that will be a recipient. And then I think it really is about this. What defines the month of September will be the Fed beginning their easing cycle. That has been this 2-year waiting period of, is the Fed going to go? Are we on the precipice of recession? Do we have to go? And I think that allows people to put money back into the market and say, what are we comfortable with? Where do we want to?
But Paul, I mean, good morning, Larry McDonald. I mean, he hasn't done anything since that essay of the year. He just checked out. He's been on the beach. But Paul, to me, the heart of the matter is the importance of September.
Yeah,
is a signal.
I know. Hopefully, we'll have a smooth month. Christina, how do you think this Fed's going to proceed here? Do you think they start this month and then, I don't know, every meeting every other meeting, 50 basis points, 25 basis points? How are you guys on your desk thinking about that?
So I think Friday's payroll report will be really important to just set the tone.
Again, I'm in the office Friday, just pointing it out to everybody.
And in some sense, it is silly that we are, even at this point, for the start of a cycle that has been years in the making, we're concerned about a data print that's a few days away.
Right.
But again, our view is that we're talking about a soft landing, and I'd say our base case is still that we're going to get more of a mid-cycle adjustment from the Fed rather than that they need to ease to neutral.
Okay, nothing really to add on that one. Alrighty, guys, appreciate you joining me as always. Thank you so much. If you're looking to get access to 1000xstocks.com, access to my private stock group, private wealth group, all those sorts of things, you can apply with the pinned comment down there. Fill out that. We'll see if we can get you access to all that later on this week or maybe next week. Much love and have a great day.